With Jeremy Hunt's new budget announced and coming into effect in the coming weeks, at Evolution Capital we've taken a closer look at the detail to see how this is going to affect shareholders of IT, telecoms and the wider technology industry as a whole. Perhaps one of the more interesting points to come through the budget is the new full expensing policy. This allows businesses to recognise up to 100% of capital spent on plant and machinery, effectively saving those businesses up to 25 pence for every pound invested. From an MSP perspective, investing this fund internally into digital infrastructure has got the ability to increase profitability, internal efficiency and staff retention also. On the other side of the fence, for those businesses actually supplying IT equipment, they're naturally going to recognise greater revenue and profitability off the back of these changes, and provided they back it off with a fully fledged managed service agreement in the background, have really got the opportunity to get those customers into a nice sticky contract. Unsurprisingly, the news we'd all been hearing around corporation tax remains unchanged, with businesses with profits below 50,000 seeing a rate of 19% and those businesses above 250,000 moving to a higher rate of 25%. The middle ground between 50 and 250,000 will be served by a sliding scale, with each of these businesses charged the new main rate of 25%, but seeing a tapered benefit in the form of marginal relief. Regarding R&D tax credits, there have been a great deal of changes specifically in our sector of how this is applied. The government have now announced that this is going to be heavily focused on loss-making SMEs with an expenditure against our qualifying R&D of at least 40% of revenue. They'll be the ones that benefit from the higher credit rate of 14.5%. Pensions, good news. An increase from 40 to 60,000 on the annual allowance, this being the annual limit on UK tax relief pension savings. However, tapering down will still affect higher earners with an adjusted income over 260,000. This is presently 240,000. Though the maximum taper will result in a 10k allowance. Currently this is 4,000. Also, the lifetime allowance charge will be removed, with the actual allowance itself being completely abolished with a forthcoming financial bill. Another interesting point are the 12 new investment zones dotted around the UK north of Birmingham. Each of these are earmarked for an £80 million investment over the next 5 years, allowing business owners to benefit from lower NICs, lower business rates and an enhanced rate of capital allowance. VAT is something which has slipped under the radar for many, and recommendations have been made by the industry working group to reconsider the future of VAT in financial services, an area in which Evolution Capital clearly operates. We are already in a position to offer competitive VAT advantages to our clients regarding a business sale, and we hope to pass on further savings in the future as these changes come into fruition. Advice surrounding tax is just one of the services which Evolution Capital offers to shareholders and businesses in the IT, telecom and technology sectors, alongside preparing for a maximum value exit, mergers and acquisitions, fundraising and financial due diligence. To find out more, please visit our website or give us a call.
Evolution Capital is the first UK corporate finance boutique to exclusively focus on providing advice to the ICT sector. We are the leaders in our field. With activities spanning 3 decades, we have provided strategic and transactional advice to over 200 technology entrepreneurs, shareholders and management teams of both privately owned and public companies. We deliver outstanding transactional outcomes by unlocking intrinsic value in our clients' businesses, by providing expert advice based on meticulous analysis and robust methodologies. This is who we are and how we do it.